Good afternoon, everybody. Welcome back to another Chart Nerd TA video. I do apologize, I've not been getting many videos out over the past week. I did actually fall relatively ill. I got really bad headaches, and I've also been working on top of that, which didn't help. So yeah, I do apologize, guys. I will aim to get more content out throughout the rest of this week as it comes. So today anyway, we're going to be taking a look at GLMR. Again, I have done more updates, more content updates on this in the past, but it is one I'm going to be monitoring moving forward. Now, I do think that this project is going to be an absolute altcoin gem moving forward into the next bull run. And right now, these opportunities, these areas down here, I don't think will come again if we do maintain and start to enter those sort of phases for the next market cycle. And macro waves here. I think this is a very good opportunity to get involved into projects where noise needs to be ignored, and looking at the foundations and the building blocks of these projects, and taking in the information that they're actually building and developing during these times, regardless of price action. It's one thing you need to consider, okay? Just because we are in a bear market doesn't mean that projects aren't building. Always do your own research, guys. Nothing that I say is financial advice. It's all for educational entertainment purposes only. But anyways, GLMR, what this project is about, it provides interoperability between Polkadot and Ethereum. So it actually runs on Polkadot's relay chain. It's one of Polkadot's first, Polkadot's first parachain, which runs off of Polkadot's main chain, It's the first parachain of its kind, and as I said, it provides interoperability between Ethereum and Polkadot, okay? And there's over 200 development applications already involved within the project. Its ecosystem is continuously growing, and they're continuously building throughout this bear market. So as I said, again, ignore the noise, guys, and focus on these projects, again, because opportunities like these in front of us here may not come around again. So let's dive into this anyway. So we're looking at GLMR here. Again, we had this in 2022, January, $40 high, retraced all the way back down to 31 cents, 99.9% correction, drawdown, bear market, whatever you want to call it. And right now you can see that when we actually entered this bear market, this 10 EMA was very strong resistance. Whenever you came anywhere near it, you floated around it, eventually met it. When you did again, you got rejected, okay? But here, it's at this point off of this rejection where you actually found a base of support and started working up in this double bottom pattern. So I'm going to zoom into this now, because we did have some slight foundational support here for over a space of a couple of months, which is actually where we're starting to break out of in regards to this price action here. So let's zoom into that a little bit and see that, you know, we've had a very interesting move here. Okay, so off of these lows, you can see that we had this double bottom pattern, okay, where you had this previous level of resistance that is now turned into support. So if I just get that on there, so you can see that around the 41 cent mark was previous support. Okay, we ran into the 10 EMA, lost that support, found a low, turned that support into resistance, came back for a higher low, created this double bottom here with a higher low, you see. And what happened is we had a technical breakout of that double bottom target, and what's happened is we've met that technical target to a T, and now we're coiling up between these EMAs, getting compression, holding support on previous resistance. Okay, so it's as simple as that. So we have previous support here, ran into resistance, lost the support, turned that previous support into resistance, fell back for a higher low, created this double bottom, broke out of resistance, and turned it to support. So this 41 cent mark at the moment is very, very interesting, okay, because it's been support and resistance many times. There's multiple points of contact. Again, when you're under this level of support, it's negative because you're turning it to resistance. When you're above it and holding support, it could be quite positive, okay? The more you hold support, you don't go short. So for me, if we start to see GLMR on the weekly closing below 41 cents, it would be quite concerning, and hitting your head on that, it would sort of indicate to me that potentially you're going to retrace back down to these lows, okay? And this is just a fake out, and these EMAs are going to provide rejection, and you're going to retrace back down to where you came from. To me, that's the negative scenario in the near short term, okay? And if it did play out like that, I think what we would have in our hands here is some sort of larger double bottom on a macro scale, a higher level of resistance. So this area here at around 55 cents is a very strong resistance, and we could form some larger double bottom throughout 2023 and into the latter part of 2023 is actually where you break out. So that is a large potential that we do meet rejection at these EMAs right here, and we do fail to hold them. It's if we start to close below 41 cents, for me, that's your short signal, and we're looking for the retracement back down to these lows for support. Okay, so it's always good to look at both sides of the story. That's the bearish outlook for me. Losing 41 cents on the weekly, zoom out when in doubt, okay, and it will give you your target back down to these support areas if we lose this support. Okay, but right now, so to speak, there is some bullish signals that we've seen here. Okay, so you could say ultimately that, okay, we've lowered out down here. We've had this double bottom pattern. We've broken out of this resistance. Have we met the double bottom pattern target? We go from the neckline to support. You can see that since you broke out the neckline, you ran into the technical target. Okay, so nothing bearish at the moment is in play. In fact, you're actually adhering to bullish support because you've broken out of a bottom pattern, ran into the target, and now you're coiling up between support and resistance and holding this 41 cents. It's if you start to lose 41 that we need to start worrying and getting candle closes on the weekly below that, of which right now we are not seeing. So what we need to consider here are the potential moves. Well, what we need to see, in my eyes, I think this could have been a wave 1. Okay, you've got this wave 2 to support right now, and we're looking for a wave 3 target, potentially up to this previous resistance here at 80 cents, pulling back to wave 1 for wave 4, and then looking for a wave 5, potentially up to this 55-week EMA as this is creeping down on us, and these EMAs are looking to get dragged up. So you can see here, let me get this away for a minute. You could see that we are coiling up between this 10 and 20. We're getting compression. Compression leads to expansion. Okay, you've come up. Right now, this could be some sort of bullish flag or channel looking for the breakout. And this is what we're looking for here. Okay, this is what I'm looking for. You've got wave 1, wave 2, back to support on this previous resistance of the double bottom. Okay, back to support, looking for the breakout. So for me, the bullish scenario, what we need to see here is multiple closes above the weekly 20. Okay, multiple closes above the weekly 20, because if you get that, okay, you're continuing this confirmation, pull back to the EMAs for support, drag them up, create the bullish cross, okay, because what tends to happen on bullish crosses, guys, not many people think of this. Many people think that a bullish cross always indicates that a pump is going to come. What tends to happen if you look at bullish crosses is you tend to, when they're about to occur, you pump into them, okay, as they're dragging up, but when you actually form the cross, you actually drag back down to the cross to confirm it as support before getting your next wave up. Okay, so a lot of people think when you get this bullish cross here over these EMAs, that just means price is going to rocket. No, you normally get a pump before it, and then as the cross happens, you dump into the cross for support, back to that this previous high here that I'm looking for, wave 4, and then get your wave 5 up to the next higher targets. So I mean, ultimately right now, you can see we're back above this 10 EMA, which we was under for a good couple of years, guys. We was under this 10 EMA from March 2022. Sorry, for over a year, we've been under this 10 EMA. And you could even say so back over here in January, so over a year. You could say that this 10 EMA has always been very strong resistance, okay? So for that long, and for this signal here to say, hang on a minute, we're back above the 10, coiling up between the 20 and the 10, we're looking for a squeeze here and a break. I think we're looking for some sort of compression. Okay, these EMAs, you're getting squeezed between these EMAs right here. A break is going to occur. And right now you are, as I said, you've had this bullish double bottom breakout. You've ran into the target. That's not bearish. Pull back for support. Holding support on the neckline. Looking for the breakout of this 20. Right now, everything is charged up looking for the break. Okay, it's all looking for the breakout. Now, how would I measure the target breakout? Well, there's another bullish pattern that I've actually spotted on the chart. I'm going to take away these EMAs for a minute and show you a potential play here too. So we've got this neckline that you can see right here that is resistance for us right now, and potentially what we've got on our hands is actually a inverse head and shoulders. So you've got this left shoulder here, you've got this head, and then right now what we're doing is forming this right shoulder. Okay, this is all we're doing is forming the right shoulder for this inverse head and shoulders pattern. Over time, if we do start to see, as I said, that I think it's 54 cents, around 54 cents, if we start to see multiple closes above 54 and holding that as support, I think that's confirming that you're in a technical target of this inverse head and shoulders, which is from there to there. And again, once you do break out, that's giving you a long target back up to 89 cents. And where does 89 cents tie up with? The next level of previous level of resistance that we haven't backtested as support yet. So really and truly, I think you've got an inverse head and shoulders here, looking for the breakout back up to this level of resistance, testing it as support. Now, what the funny thing about this is, again, this is all thought experiment, guys, I'm sorry, but this could be a smaller head and shoulders inside a larger one. Okay, so you've got this level of resistance here, this neckline. Okay, you've got your inverse head and shoulders here. If you break out of that, again, you're running up to 90 cents. That's the target. Now, what you need to look at here is a pullback to this level for support. Because if you do, you've got a large left shoulder here, a massive head. Okay, and then again, if you pull back to support, you've got a larger right shoulder back down to this neckline. Okay, if we pull back to support here, you've got a larger inverse head and shoulders on the weekly time frame. And again, thought experiment, guys. Getting a bit extravagant here. But again, if you broke out of that, you can see that that brings you back up to this level of previous support that we haven't actually backtested as resistance either, at around $2.30. So it could be, there's patterns within patterns that you could look at, guys. It's all a thought experiment. But right now, I do think we're looking very healthy. We have, on the weekly, broke out of this double bottom. We've backtested it as support. Okay, so double bottom, broke out, backtested support. All we need to see now is the breakout. And I do think you're potentially looking to run back up to this high, offering us a long opportunity right now of around a 76% for GLMR in the next few months moving forward. That's all about holding this 41 cent support though, guys. Okay, if you lose the 41 cents, I showed you the bearish scenario, we're tracing back down to these lows. Okay, but if we keep holding that and breaking above these EMAs, and getting this compression here with these EMAs, I do think we're going to start looking towards a pump towards around 89 cents in the near future. So there's a quick update for you today on GLMR, guys. I hope you enjoyed the content. If you did, please do like, comment, and subscribe. Hit that notification bell for my next videos. From Chart Nerd TA, take care, guys. Peace out.